Hey, what's up, everybody? We are going to go through 5 of the best growth stocks for February 2022. I'm super excited about this because growth stocks have come under a lot of pressure. So if you're out there watching this and you're like, man, where do I go for growth? Well, you need to be looking at quality, or at least I think you need to, right? This environment is very challenging. Lots of stocks are down. But I like to look at data to help me navigate through the world of investing. So let's go ahead and jump into the portal right now. All right, so before we get into the stocks, I think it makes sense to go through the environment of the market. So this is a new chart that we've been working on behind the scenes, and it's looking at all the stocks that are getting bought and sold year to date, basically by market cap. Okay, so your small caps are here, 500 million to 5 billion. Then 5 billion to 50 billion, and so on. But look at where all of the selling has been, right? So if you're looking at your portfolio, you're like, man, a lot of stocks are down. Well, you can see it's probably a small cap if you're, experiencing a lot of pain. Look, my portfolio is down too. But look at this, only 264 small cap stocks got bought year to date versus over 1,300. The same thing, if you take this out to 50 billion, look how many sell signals versus buy signals. I mean, it's not even close. But if you have some of these larger cap names, they have actually performed relatively well, right? You think of like dividend growth, you think of some of the big, huge technology names that have been holding up the S&P 500. That's what's been working in this tape. Okay, so now we can look at the data. It is clear as day that small caps have been where the pain is. And so what has benefited in this environment, right? Rates are rising. Everybody's worried about inflation. It's been some of these larger cap, more established names. And so as we get in today's stocks, 3 of them are going to be big mega caps. 2 of them are going to be on the riskier side. They're going to be some of that smaller cap. But regardless, if you're looking for great growth stocks, they need to be growing their fundamentals, which I'll be showing you how I look for those. So my process of finding great growth stocks is 2-pronged. First, I want to see what is attracting big money over a 1-year time span. And the number 1 stock is going to be Alphabet, which is the parent Google. Now, by now, you know that I love data. I really love big money data, right? So all those buys and sells that we saw earlier, those are actual stocks. So Google, let's cover them for a second. They just had blowout earnings, and you know Google, right? You're watching this video, they own YouTube, right? They sell ads on YouTube. They sell ads all over the internet. So if you search for things, you are probably using Google. The way I like to think of this company is they're kind of like a staple of the internet. They're kind of like a toll booth. They just print money. But more importantly, and the way I like to look for growth stocks is the big money constantly buying the shares over the long term and over a 1-year basis? Absolutely. That's what these green bars are. And then we can see that it came under some selling pressure, just like every stock out there, basically. But it just had a rock solid earnings report. The company just announced a 20-for-1 stock split. So things are looking really strong for this company. But when it comes to going for growth, you don't want to just look at technicals alone, right? Growth stocks are defined by their growth in fundamentals, right? Growing revenues, growing sales. So these blue bars, this is our way of letting us know that this is a quality stock, okay? Blue bars basically indicate that this stock was going up with big money and it scores relatively well fundamentally. I mean, look at this. I like to call this the stairway to heaven. I bought this stock years ago, continue to own it. It has been really, really great. If we can come down here, the fundamental score is 87.5. That is so strong. Let's go ahead and look at some of those fundamentals really quick. All right, so I like to build models and look at things very analytically. And so we're going to be looking at some cool data under the hood of Google. So the top area here, that's basically looking at those technicals, right? So we know that the share price is just over 2,800 bucks. It's almost a $2 trillion company. That is a monster size. And year to date, it's not down that much. So it did have those 4 sell signals, but more importantly, all of those blue signals, right, that tell us it's a high quality stock. There's been 42 of them since we've been in business. That's in 2014. But look at the fundamentals under the hood of Alphabet, of Google. The 1-year EBITDA growth is 14%. So again, we're looking for growth stocks We want revenue, earnings to be growing. We want a very big gross profit margin. Also, cash flow from operations minus capital expenditures to be positive, and they just print money. Debt to equity ratio, so they don't carry a ton of debt relative to their equity. And then their forward PE is just 25 times. So for a growth stock with this kind of, it's basically a scorecard. This is exactly the type of company that I would be willing to bet on in the years to come. And that's why it's the #1 growth stock for February. All right, so the #2 stock that we're going to be looking at for growth, this is none other than a high quality name, Adobe. Now, listen, we saw that a lot of the buying was in these mega caps. Adobe is one of those, right? But of course, it's a tech stock. A lot of growth stocks have been getting sold. And let's talk about Adobe, right? It's a software play, right? So whenever valuations have contracted in this environment, a lot of them are getting sold, especially the good ones, unfairly. And so again, we want to be using data to let us know if it's a high quality growth stock or not. So listen, we're going to be going through the data together. Obviously, the stock has been for sale, but does it have that quality factor that we've been looking at? It does. The more blue, the better. Look, there's no other way to say it. It just gets exciting whenever you see a stock continually repeat as super high quality. Okay, and we're going to look at some of those numbers in a minute, but the fundamental score tells me right off the bat, it's going up with big money, right, over the long term, and it scores well fundamentally. This might be a great growth stock. All right, I like going for best of breed, and Adobe literally has some of the best fundamentals in the game. So let's go ahead and look at the technicals first, right? We know that on a 1 month basis, year-to-date basis is down 9.5%. This is on a big company, right? $242 billion market cap. Why is it down? Well, it's got 5 sell signals. But does that mean that it's a bad stock? Well, based on history and our process, it is a great stock. And that's because it's got 66 of those blue signals, right? And that means it's high quality. But look at the report card, right? Imagine you're looking at your fantasy league, right? You want to see players that have great stats. The same thing happens with stocks. So for Adobe, 1-year EBITDA growth, up 15%. Look at the 1-year revenue growth, 3-year revenue growth, 1-year earnings growth, 3-year earnings growth. Gross profit margin, these are all double-digit numbers. Cash flow from operations minus CapEx is almost $7 billion. How you doing? Debt to equity, it might be a little high, but for a fast-growing software company, I think it's reasonable. And then a forward PE of just 37 times on a name like this qualifies to me as a great growth stock. Okay, so #3, we're going to go for quality and big, and that is Microsoft Corporation. Look, everybody knows who Microsoft is. Huge software player. If you are using Outlook or any of their tools, Excel, you are very familiar and you depend on Microsoft, right? Whether it's emails, whether it is cloud, whether it's running a database, you name it, they probably dominate that space. And it has been a big money magnet for the past year outside of recently. So the recent pullback in the market has pulled back on every single stock, just about. But Microsoft is super high quality. And right, in full disclosure, I've owned this for a number of years and I've been reinvesting my dividends. But why is it a great stock? It's because of these blue signals. And look, years ago, Jason and I, we were sitting here and we're like, man, how do we find the best stocks out there? So we came up with like an automated process to show us these blue signals like, hey, pay attention. And the cool thing is the outlier stocks out there, right? The ones that continue to dominate year after year, they are the ones that have all this blue. And if we keep coming down here, we can see the fundamental score, 75%. That is a monster score. So again, we have to look, is this a growth stock, right? Are the numbers growing? That is what tells you it's a growth stock. And we can see that it is, but first, let's look. It's almost a $2.3 trillion company, which is massive. On a 1 month basis, it's down 7%. And a lot of that is due to 5 of those sell signals, right? Those red sell signals. But is that opportunity? I think it is, because it's been on that blue report 35 times, okay? That makes it an outlier stock. And you can see, why was it shaded blue? It's because it is scoring all A's on all of these fundamental metrics that I care about, right? So EBITDA growth is double digit, revenue growth, double digit, sales growth, earnings growth, profit margin. Look at this. They basically print money, and it is a huge dividend grower. Now, I know the yield isn't that much, 0.8%, but this has been one of the biggest dividend growers over time. And I think they have the ability to continue to grow it year after year. These are the best growth companies out there. It's got a forward PE of 33 times. This is one of the best growth names out there as far as I'm concerned. All right, for number 4, we are going to be looking at the other side of the pond and looking at some smaller cap names that are super high quality in my opinion. So number 4, the growth stock, is Generac Holdings. Now, if you've never heard of Generac, they basically make generators, energy for whether it's small companies, whether it's homes. I think they're more known for their residential products, but I know them because they have been a stalwart in our data, right? And so when they come on sale, I am actually thinking that this could be a potential opportunity. So on a 1-year basis, the stock was doing really well until that big growth scare happened back in November. But why do I know this name, and why is it potentially a great growth stock? It's because we know that there have been a lot of quality buy signals in Generac. So clearly the fundamental picture is likely strong, and we can see here that it has a score of 75%. You want to talk about a growth stock, it needs to be growing its fundamentals. Now, Generac is just a dominant company. Now, it is down 20% year to date, which is huge, right? Because there's been a lot of selling, right? And it's also part of that small cap selling that I was showing you earlier in the video, right? But is it a high quality stock historically? And it is. It's got 25 of those blue signals. And man, oh man, look at the growth rates here, right? We're talking about the best growth stocks that I think are available for February. And you look at the 1-year EBITDA growth, double digit. Look at the revenue growth, earnings growth, sales growth, gross profit margin. I mean, these are double digit. I mean, this is high quality. They make a lot of money. They have some debt. Their forward PE is 29 times. I think it is worthy of consideration. All right, so the number 5 stock is a great one. It is a small cap name. It's under the radar. It is InMode. Okay, and before I tell you a little bit about it, I want to fully disclose that I own it in personal and managed accounts. I really, really like this company. And a little bit about what they do is they do non-invasive surgeries. So a lot of women are using their products for acne, facelifts. And it's so like an interesting story, right? Because who does that? But whenever you see the data, this stock got me so excited. So that's why we're putting it as the number 5 name. So look, lots of buy signals earlier, last year, but then it has come under immense pressure. I mean, the stock literally was like 98 bucks, fell down to like 40. I mean, that is, getting cut in half more. Then you can see, look at this, blue signals. That's a stairway to heaven. That is what you want to see. It is high quality, right? This stock clearly is a fundamental juggernaut, right? And check this out. Look at the fundamentals, 92%. Clearly they are growing. So let's go ahead and look under the hood. All right, they say to save the best for last. This could be the best long-term name that I really like right now. And it is a $48 stock, $3.7 billion market cap. And look at this. Year to date, it's down 32%. I mean, a lot of stocks are down so much. InMode is one of those. But look, we know that it is a high quality name based on our process because it's had 20 of those blue signals. And whenever you look at its scorecard, right, the report card of the stock, the growth numbers are so heavily positive. I'm just going to go through these one by one because it's such a big time name for me right now. 1-year EBITDA growth rate, 14%, 1-year revenue growth rate 32%, earnings growth 3.8%, but look at the 3-year rates. Unbelievable. Like, that is just growing like a weed. And when you're looking for a growth stock, you want a lot of green in this area, okay? Big time gross profit margin, cash flow from operations minus CapEx is very positive, very low debt for this company. And I think even more impressive is it's only a forward PE of 24 times. That is growth. That is the quality growth that you're looking for. All right, so those are my 5 best growth stocks right now. Remember, none of this is personalized investment advice of any kind, all right? Make sure that you do your own due diligence. I just want to show you the power of data and how it's helped me in my process. Please, if you don't mind, like, share, subscribe to our YouTube channel. It really helps us out as we deliver great free content. I will see you next time. Yeah.